Alrighty, what is going on, everybody? Today I'm here to present you guys my updated strategy video on exactly how I trade. This is going to be the 2023 updated version, right? The last video I've posted was in 2022, but my trading has changed up just a little bit. A lot of it is almost the exact same thing. There's just little few things that I do. And for today's video, I'm really going to be breaking it down in a very mechanical sense, in a very simple way, and it'll be very good for y'all. And this might be even a quick video, I don't know yet, but it's gonna be a good video going over exactly what I do and exactly what I trade and how I trade it. So basically, I go by a two model strategy here. I use a trend model strategy and I use a market structure shift strategy here, and I use those two simple model strategies to help me identify setups and take setups potentially right. The most important thing when it comes to trading in the market is you want to have a system developed for you that fits your personality and you stick to, right? You don't want to just be in the market and randomly trading different strategies at once. You want to find one specific strategy that works for you, and this strategy here is what I've been using pretty much for years, and obviously, it changes ever so slightly, but I've been using this basic strategy for years, and it's made me so much. It's made me grow so much in the market. It's made me a good amount of money as well, like I said. And yeah, this is what it is. So the first strategy, like I said, is the trend model strategy. So the key steps for the model to validate is we need continuation of strength and trend. That's always the most important thing, right? The biggest thing you want to see when it comes to a trend model play is you always want to see strength be there. You always want to see volume, pressing up and always showcasing power. The second thing you want to see is continued creations of lower highs if you are bearish and higher lows if you are bullish in that trend. You also need to break a lower high. Then you need a retracement into a fair value gap. This is my preference here. A retracement into a fair value gap here is very detailed, but that's my preference in order to get a very good entry here. So what the thing is with the trend model here, you could play either version. You could either play the initial breakout, which you don't need this, or you could play the breakout and retest. And for me, what I like to do is I like to see a retest and a retracement into a fair value gap here that could validate, and typically that's when I like seeing my entry points come in, right? And so the final and fifth step here is a retracement into previous highs slash previous lows or highs here. And so basically with this trend model here, it's very simple. If you guys remember, I used to really incorporate EMAs into my trading, and I still use it here and there. But I really like to do here is look at fair value gaps instead, because they are very more market oriented. They're very, very more mechanical, right? They're just straight from the market, right? No added indication. EMAs are added indications. Fair value gaps are not added indications, right? They're straight from your chart, right? You draw them out on your own and you see it, right? So I like a fair value gap retracement here and there. So if you look at the chart here, this is a bearish trend model, right? We're seeing consistent lower highs here, and so what I like to see here is if you look at this line right here, right? We come down here, create our first low, come up here, maybe into a fair value gap retest right here, and then come down, eventually break this low. What I like to then see is a new low get created, where we see this previous low getting taken out, come back up, retest this fair value gap plus previous low, right? If you look at where this FEG lines up here, which is typically where we tend to take, it's obviously in the strength of downside movement, and it also is through the break of this previous low here. So this is a good retest, right? That two combination right there, that two-piece combination between it being a previous low retest and a fair value gap retest is very, very important, because it gives you that much more confidence whenever you see that. Typically within around the 50% retracement mark or even the full mark is when I like to take my ads, and then we obviously take the move down, TP1 being the slow, TP2 being continuation, right? So that's exactly what it is. It's that simple, right? With trend continuation, come down, come up, retrace it to fair value gap here after taking out previous lows, and see a good rejection here where we see good downside, right? So that's pretty much what it is, right? The second model here that we're going to be going over is a market structure shift model. It's a very much so risk to reward model here. With that last trend here, right, with this last model here, it's a trend model here. So your risk to reward is not the greatest, but yet you're playing strength here, right? You're playing trend here, obviously. So the second model here is a market structure shift model. And basically what this pretty much is you trying to anticipate the bottom or top of a move, right? So with trend, you're not trying to anticipate the bottom or the top. With MSS, you are, right? That's pretty much what you do here. And so with MSS, the key steps for a model to validate is good structure and a base off a level point or a pivot point, right? Whenever we see an MSS form, you always want to see that happen towards a very key level, maybe a historic level, or it could be an intra-week level here. As long as it's very powerful and it's a very big level that you could really rely on, that's where you want to see it, right? That's the number one thing. Number two, a creation of low slash high, then a liquidity grab and sweep here. So what I mean by that is just like with this previous trend model here, you want to see a new low get formed, right? So we come down here after breaking this high right here, or breaking down off this low, or this previous high, which now acts as a low. We come down here, we sort of see a retest off this level, right? We come down, see a retest, pop up initially, form BOS, right? Which is structure pretty much that we're ready to break if you're watching for an MSS. We come down here, we form a second low, and we sweep this liquidity here. So this is what I mean by creation of low. This is your creation of low. This is your first leg. This is our new low. Come up here, form structure, then come down and take that low, right? What does that do? Well, what you got to look deeper into the market, right? Whenever you see a low getting taken out like this, whenever you see a sweep of low, that basically, lets you know two things, right? One, people who are buying here, who are anticipating a bottom here and riding it to the upside here, you got stopped out, right? So on the move down, as we're moving down, and as we break this low here, there was a lot of buyers that most likely would have held longs, right, with the stop being lows. So what they do is they come down here and they sweep this low here. They get price to trade under that low so they could trigger those stop losses. And then what they end up doing is they reverse it, bring it back up after the sweep here, and see an aggressive move towards the upside. That way they're able to take out buyers on the low, and they're able to take out sellers on the high here. So that's pretty much what I'm looking for. And typically that happens a lot of times in the market, and that's how you're able to beat the market, right? Because you're able to see market makers doing that in front of you, and so you anticipate this and you go from there, right? So that's exactly what that is. After we see this low right here, what I want to see is a break of structure, right? What does a break of structure do? Well, it signals, and it tells you that price is very, very strong, right? Whenever we see a break of structure, especially if it closes flush and it closes aggressive, it really tells you that price is tremendously powerful and it's gearing up for a nice extensive move. So whenever we see a BOS, it's a good signal, right, for continuation. The next thing, which also kind of aligns with BOS, is a sign of strength and to move. So yeah, whenever we see a BOS move here, like I said, you want to see it pop off, right? You don't want to see a slow burn to the upside here. You want to see it come up here, take out BOS with aggression, with impulse, with closed flushes. You want to see nice extensive volume kicking through that BOS. That's exactly what you want. The next one is you want to see a BSL, so that's resistance structure, as your TP, right? So whenever you have this MSS model play out and you see the BOS get taken, you always want your first PT to be BSL, right? What BSL is this could act as BSL, right? Because this is now a previous low that now is a next high, right? So we came up here, took out this BOS, and as we're seeing reversal, we pretty much came up here, and you want to target this high being BSL, this high being the magnet for where price could attract to for bullish price to go. And so that's what your TP wants to be, right? I'm never going to hate against anyone taking early, right? Say you take within the halfway market here, you take profits. I don't mind that at all, right? Taking green is green, but if you want to have direct mechanical TPs, this is your first TP here. That's what you always aim for, right? And then the final and the most important thing I would probably say is the stop loss should be the low or the high close flush. Now, what does close fucking flush mean, right? A lot of traders that I know who use MSS like hard stops, but what I like to do is I like to wait for close flush, right? And I like to do that because a lot of times within market conditions, what we're able to see a lot of times is even after we sweep a certain model, we still see that same occurrence happen again, right? And so what market makers tend to usually do is they see the sweep of the low, and so we come down here and somehow see a retest. We could even take this low out here and then eventually properly sweep through larger time frame narrative. And so what I like to do is I like to have my stop close flush, which means I want to see a full candle close, no wicks, no nothing, a strong full candle close under in this bullish scenario, under a stop loss, then I'd get triggered, right? The thing with hard stops is a lot of times you could see price wick under your stop, but then come right back up. So what I like to do is I like to wait for a candle close because the probability of us seeing continuation of a flush candle close is a lot higher than getting getting stopped out hard. So that's exactly why I do that. That's pretty much what that is. So you guys can see with the first, the two models that we go here, trend model, right? It's just playing continuation, playing trend, and doing very well with that, right? Taking off a retracement and catching a very nice scalp. With the market structure shift model here, you're more so being a lot more patient, and you're waiting for the R to R to present itself, right? The risk reward is very tremendous here, and that's exactly what you're waiting for, and that's what you wait for pretty much the whole entire day. So here are some examples here. If we look at this first example here, this is what you call a trend model setup. This is a trade that we ended up taking as well on voice chat here for our last challenge, that 1,000 to 10K challenge. This is one of our trades here. And this is what I believe to call an A++ trade for a trend model, right? If you guys look at the trade here, this high right here, right? We were obviously bearish coming into the day. We had seen a nice downside move here. This level right here that you see on your screen, right, this 41.52 level here is an area of sell side liquidity, right? So whenever we take out sell side liquidity, aka it could also be acted as support, if you really want to call it that. But with sell side liquidity, every time you see a level break, you always get one of two results. Like I said, right? You always see a sweep and a fake out and a reversal back up after we take liquidity, or you see a break of sell side liquidity here. You see a break of that support line, and then you ultimately end up seeing continuation here. In this scenario, you can see that we came down here, took out liquidity, closed flush, right? And basically what I wanted to see here was a retracement into a previous low, right? A previous low is what I wanted to see. And pretty much that's exactly what we got here, right? We saw a previous low get tagged and came down, ended up coming back up here. We had a 1 minute fair value gap right here, right? If you look at this 1 minute fair value gap, this is your 1 minute fair value gap that we had in mind. And we marked this out here. And what I pretty much wanted to see here was I wanted to see a retracement into that fair value gap, which also happened to be near this previous low that we did just end up snapping here. So if you go back to our trend model analysis here, what did we say? Come down here, break a previous low, come back up, retrace into that previous low and that fair value gap here. So you can see in this model, this is exactly what we got here. We came up, retraced, saw a bit of hesitancy through these wicks, right? We saw 1, 2, 3 single wick rejections here off this 1 minute here. And as soon as we got this rejection candle here, that's when we took our entry, had our first TP be this new low that we formed, right? PT1, low of day. PT2 was the structure that we had formed here as well after taking, right? And so what happened here is you could see that obviously, like I said, break and take of sell side liquidity, came down here, came up for a retest, and now how we reacted off of here would have determined if this was a sweep or not, right? So what you were able to see is through these candle rejections here, this was not a sweep, right? It was actually just a retest of structure. Fair value gap retest as well, previous low retest. Rejected here pretty aggressively, like I said, took our entry, TP1 right here being low of day, TP2 being the next area of structure. It's that simple, guys, right? We saw a nice leg down, take a liquidity, and still continuation, right? You always want to watch price when it comes to certain big levels, like I said, because you always have those one of those two reactions, right? You either see a sweep and a fake out, or you see a break of that level and continuation. And right here, that was pure continuation, right? And so that's really what separates a trend model between a market structure shift model, are those two things right there, right? Is it a sweep and a fake out, or is it a clean break and continuation, and then we come back up for a retracement? In this example right here, you could tell that it was trend because we came up for a retracement into that fair value gap and that previous low, saw a nice rejection here off this fair value gap, came down, saw continuation, and went from there. Very simple strategy. That's exactly how we trade almost every single day with the trend model strategy. Some occasions it's a little different, right? Every single day it's a little different. That's exactly pretty much, this is what an A++ trade is right here for a trend model setup here. So for a market structure shift model here, this is the perfect example I want to incorporate for this. This is another A++ trade here, but for a market structure shift model here, you can see ES coming into the end of the day here, this end of this trading day here. We had ES sort of come down here and consistently form lows here. So what you guys should be able to recognize here is that you guys can see that we were in a trend model, right? We were in a trend model before we formed that MSS. So that's typically what we like to tend to usually do, is we tend to usually like to see a trend model play out before an MSS here. And you can see with the trend model here, we were consistently creating lower highs, right? Consistently seeing retracements into previous lows and good retests to where you could eventually just take. And that's how a trend model validates, right? And so we ultimately ended up coming down here, and you could eventually see that we created our first low here, to which where we finally saw a good, decent relief here, right? Created our first low, then we ultimately ended up coming back down here. What did we see? We saw a take a liquidity, but instead of this time, like every single other previous time with these lower highs here, we saw a reaction off this low here, right? We came down, took liquidity off these lows, and came up and actually formed a base, to which we eventually formed 1 minute BOS here, right? 1 minute BOS. We had structure here, and I knew once we broke this area of structure, there was a good potential take. And now referencing our model here, like I said, break of BOS, sign of strength and move. this is what we talked about just a little earlier, right? In the sense that you want to see BOS be strong, right? You want to see the break of structure be strong and close flush. And you guys go to this model here, and you can see through this candle right here, which was the BOS, right? The BOS, we saw a very hard and strong, candle close here above our level here. So that gave us good confirmation. These next two candles here retested that previous structure, and we ultimately ended up just bouncing here and seeing a nice move here, right? And so what had happened is we formed that first low, came up. This is also what you call 5-minute liquidity here if you want. We came down here and we ended up forming that second low right here to where we took liquidity and saw strength kick in, right? And so that was a good model right here. And what you always want to see with market structure shift models is you want to see a bit of chop, right? I always say that in chat as well. You want to see us sort of consolidate and be a little choppy through this model development, because the more we chop, the more we base, the more we accumulate, the bigger the move is going to be, right? And that's exactly what happened here. We saw a bit of consolidation, and we eventually saw the move come up here, right? And as soon as we saw that 1 minute BOS, you take your stop loss is the break, or your stop loss is low a day here, which was this new low that was swept these lows, and that was your stop loss close flush. Came up here, these next two candles here were retest to take, came up consistently. Your first TP would have been this 5-minute liquidity. Your TP2 would have been the next local high liquidity, right? And pretty much what I like to mark with profit takes is just the highs and lows of certain areas, right? And this is your local high, this is your swing high, this is your previous swing high, this is your previous swing high too. So I just like to mark those for my TPs as well. But yeah, it's that simple, guys. It's really that simple with this market structure shift model. That's exactly how we trade this two-step model here, and it's pretty much all you guys really need to know in terms of how we trade. If you guys always have any questions you guys want to go over, please let me know after watching this video. If this helped you, drop a thumbs up on the video, obviously, and just like I said, if you guys have any questions, always let me know. We'll be active per usual. And yeah, I'm gonna catch you guys later. Peace out, y'all.